to have some disappointments? Should investors prepare for that?
Well, I'm not preparing for it. I think everybody sort of knows what is wrong. Rates have come up, housing has come down a bit. You know, the trading activity is a little slower. You know, IPOs are good, but they're not enough. And so I think that's where you're going to see, you know, the downside. But I'm not that worried about near-term or anything. I'm really looking out 3 to 5 years and saying, what are these companies going to look like in 3 to 5 years? And that's really what I'm looking at.
So do they look better than how they do now?
Well, I think what you've got is an industry, especially at the big guys, where there's a lot of assets, there's a lot of liabilities, there's a lot of headcount, there's a lot of branches, and all that needs to be reworked. And so we're in a new environment for these companies, and so the question now is what managers are going to reshape those companies and take advantage of what's happening.
Is Citigroup's new CEO one of them? He's been in his job for about a year. I mean, is that a better stock than it was a year ago, and is that a stock that you look to in the future?
Well, certainly it's one of the ones that's a big position in my portfolio, and it's there because, again, I think the manager is thinking inward, which I think you have to do. You know, the outward part is over. We don't have to worry about credit as much. We don't have to worry about interest rates. We don't have to worry about the economy. Now we have to say, let's fix it internally. We need to find those managers. I think he's one of those.
So when you say fix things internally, will we see these big banks shrink?
Well, there's a lot of things they could do. They could shrink. They could break up, like Ma Bell did.
Should they?
Well, I think it's a possibility. I mean, it's really a question of whether we can make money doing it.
Yeah.
And I think if they view that they can make money where the 5 companies is worth more than the one company, then they'll do it. And if they can't rationalize that, they won't do it. So it's really a question of how they're going to deal with the next 4 or 5 years.
Is Citi a candidate for that? Because certainly that was always something discussed in the past.
Well, I think they all are. All of the big banks,
Morgan,
all of them are. And really a question now is, how is that going to play out? So really you've had 30 years of declining rates since really I started in the business. That's over. We're not going to have 30 years of declining rates the next 30 years. So the world has changed for them. The regulatory cycle is much different, and it will stay much different, in my opinion. Capital, the Basel rules are coming in. There's going to be higher capital requirements, and the economy has changed. How people spend money, how they invest money, how they borrow money has all changed, and so they have to rebuild their businesses around this new reality. And it's just starting. This is the beginning of another long cycle of them reinventing themselves.